What's going on, you guys? My name is Zach Hartley, and in this video I want to talk about how to use the VIX indicator and how it works. Here is everything you need to know. Let's go. Okay, so the VIX is also known as the volatility index and also known as the fear index. Now it's known as the fear index because the VIX measures the amount of volatility in the market. Now, volatility to investors represents risk and uncertainty, and that is not what investors want. Investors want certainty and steady returns. And so when the VIX goes up, that means that there's increased risk and increased volatility in the market. Now, how do you look at the VIX and how do you find it? Well, it's fairly simple. It is a chart very similar to a regular stock chart. You can look it up with a ticker symbol. And so on Questrade, it is VIX.IN. On stockcharts.com, it is VVIX. And if you just type in VIX into almost any platform, you should be able to find it no problem. Now, the VIX itself is based on a mathematical formula. There is no company underlying the VIX. It is not an organization or anything else. It is quite literally just a mathematical formula. And that formula is based on out of the money calls and puts. Now, here's what the formula looks like. And because it is based on out of the money calls and puts, it is going to basically measure where people expect the market to be in the future. And that represents volatility. And the higher out or the further out people are expecting the prices to be in the future, that is what will cause the VIX to go up. And that indication of the VIX going up is what we can use to determine the direction of the markets. Now, what do I mean by that? Well, the increase in the VIX, or when the stock chart or when the price chart in the VIX starts to go up, that means that we are seeing increased risk in the markets. And because of that, when the VIX goes up, it usually means that the market is going down. And so here is what it looks like on my Questrade charts. So this is the VIX on the left-hand side here. And as you can see, it starts to go up right here at the middle of February. And on the other side here, right in the middle of February, the S&P 500, which represents the broad market index, begins to sell off. And so as you can see, it fell from over 3,300 points down to around 2,190 points. And so massive sell-off from the S&P 500 directly correlated with the VIX going up. And it goes in the other direction as well. So when the VIX goes down, as you can see pretty much across this entire chart, the S&P 500 went up. And so the VIX and the market are inversely correlated, and you can use the VIX to try and determine what direction the market is about to go in. So when the VIX begins to go up, that means that the market is likely about to sell off, and the exact opposite is also true. And here is a really good representation of that. So this little chart on the right-hand side on the bottom here, you can see that when the VIX is going in the downward direction, the S&P 500 goes up. When the S&P 500 goes down, the VIX goes up. And these are not correlated. They're not connected to each other. The VIX is based on volatility in options. The S&P 500 is based on over 500 different stocks. So what's really nice about this is that they give us sort of the same indications, and we can use the VIX to try and understand what is about to happen in the S&P 500 or in the markets in general. Because the VIX, like I said, is inversely correlated with the market, so we use the VIX to determine the direction of the market, and we sell as the VIX starts to go up, and we buy in when the VIX starts to move down. That would be your best entry and exit points. And so what you want to do as a trader and what you want to do as an investor is try and look at the VIX on the same time frame that you are looking at investing on. So if you're looking to invest very long term, then look at it on the long term. But if you're a day trader, the exact same rules apply. And what you want to do is use the VIX to understand what the market feels, what direction the market is going in, and then making sure that you are buying in the same direction as the market. The last thing you want to do is buy into a broad market index or buy into a variety of stocks right as the VIX is starting to go up, because that is an indication that people are expecting more volatility in the future. It's also an indication that the broad market is probably about to sell off. And so we want to use the VIX to our advantage to try and understand what is about to happen next in the market. And we can do that by looking at the VIX and seeing whether or not it is going in the upwards or downwards direction. Now, if you're interested in checking out the VIX on Questrade, that is the platform that I use. And if you use the link down below, you will get $50 in free commission. So you can try out the platform completely free. They have tons of different accounts, and I promise you it's going to be the best platform that you can find here in Canada. It's a whole lot better than Questrade. It's a lot better than any of the other platforms, and it gives you a lot of control over your trading. So definitely check that out. The link is in the description down below. And if you're interested in learning a little bit more about the stock market and how to understand where to put your money and how to actually read the markets a little bit better, then definitely consider signing up for my Stock Market Fundamentals course. It is completely free. It's hosted on Skillshare. And when you use the link down below, you get 2 weeks of free access to the entire platform where you can take my course and any other course that you want and then cancel that subscription in under 2 weeks, and you just got everything completely free. There's over 10 hours of content that will walk you through step by step everything you need to know about getting started in the market, and there's over 8,000 students that have already taken the course and 325 reviews for you to take a read through. Now, if you get any value out of this video, remember to click that like and subscribe button. I sincerely appreciate you watching this course. Check out the links down below, and I will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.